Welcome to the January 2025 Taxation and Economic Development Policy Committee meeting of Ellevate, Louisiana. Today, we will be hearing from Research Director Melinda Deslatte about the constitutional amendment that will appear on the Louisiana ballot on March 29, 2025. Melinda joined the Public Affairs Research Council as their principal researcher after serving as the chief of the Capitol Bureau at the Louisiana legislature. That's where I really got to know her and her professional level of reporting. And I think PAR really scored a couple of years ago when they hired Melinda. So we want to welcome Melinda in. And just as another little bit of information about the slideshow, we are being asked to vote for this constitutional amendment on March 29th. And it came as a result of the tax session that the Louisiana legislature entered. I believe it was their third extraordinary session of 2024, and it was focused on tax reform, and that was in November. So really, without further ado, I will go ahead and turn it over to Melinda, who can share her slides and give us plenty of good information.
Thanks, Julie, for having me today. So, as Julie said, I work for PAR, and we have the illustrious task of doing a constitutional amendment guide every cycle that there are constitutional amendments on the ballot, which since I've been at PAR is every year. I'm going to hope this is the only one I'm doing for this year, and we don't have to do another round in the fall, but we'll see how that goes. So let's get started. If I can click through. And back. Okay. So as y'all know, this amendment will be our Amendment 2 of 4 on the March 29th ballot. So even though the legislature was technically in a tax session, they did pass 3 other amendments that are unrelated to financial issues. They're involving the court system and juvenile crime and other things. So this one will be Amendment 2. It passed overwhelmingly in the session. It got an 87-11 final vote in the House and a 39-0 vote in the Senate. It is a lot for voters to sift through. It's a 115-page bill, but it has all of these companion bills that enact corresponding provisions in state law to match what they're doing with Article 7. So if I show you, this is the stack of paper that involves both the amendment and all of the corresponding bills that go with it. So it's a lot to get through, and hopefully we will break it down as cleanly as possible in our guide and in the presentation today. But essentially what it does is it reworks and reorganizes the largest section of our Constitution, and that's Article 7, which deals with revenue collections, the state budget process, state savings accounts, and state and local taxation issues. But the one caveat I'll say is for voters, the ballot language doesn't entirely account for the full scope of what the amendment does. Y'all are fairly well informed in this area, so you know obviously the legislature cherry-picked what it wanted to highlight in the ballot language for this amendment, but the amendment does a lot more than what the ballot language says. So we'll start with, I am breaking it down sort of the way I am breaking it down as I'm writing our legislative guide, so we're kind of separating it into different categories. So this section is sort of the general taxing authority that state and local governments have. So at a high level, among the many, many things that we'll do in this section is the standard deduction for anyone 65 and older will be doubled. The state sales tax exemptions that currently exist on food for home consumption, residential utilities, prescription drugs, all of those stay. And I want to stress that's the state sales tax exemption, because obviously local governments can charge in some areas of the state their own local sales taxes on prescription drugs. But what will newly be done is this provision would prohibit enactment of a property tax on prescription drugs. So locals may be able to charge their sales tax rates, but they won't be able to newly add a property tax on prescription drugs. Additionally, the legislature is proposing to make it to make it a unified sales tax base, essentially. So any new sales tax exclusion, exemption would have to apply to both state and local sales taxes starting in 2026 to be enacted. You wouldn't be able to enact something that is a sales tax break on the state level that doesn't match what happens on the local level and vice versa. They're also proposing to make it harder to enact new sales tax to any kind, not just sales tax, any kinds of tax exemptions, exclusions, deductions, or rebates by requiring a 2/3 vote of the legislature to enact any of those. They also would require a 2/3 vote to increase the amount of any existing tax deduction, credit, or rebate. Additionally, they are changing the language in the Constitution that sets a cap on the individual income tax rate. So currently, the cap in the Constitution says the state cannot charge a personal income tax rate that's higher than 4.75%. They would lower that to 3.75%. Now, I will say that in existing law, we only charge 3% as the personal income tax rate right now. Anyway, this just would prohibit them from going up if they ever wanted to higher than 3.75%. So also what this section will do is the legislature would remove the requirement for a minimum cigarette tax rate to be charged and the required state motor vehicle license tax. Those rates exist in state law. They had just been put in the Constitution for whatever reason. I'm not sure about the motor vehicle license tax. I can tell you that the reason the minimum cigarette tax rate got put in there originally was the legislature was trying to go around Governor Jindal when he was refusing to support tax increases of any kind, and they wanted to raise the cigarette tax. So they put it in the Constitution, not because they really wanted it there, but it was a way to not go to the governor so he could veto it. So now what they're doing is removing that requirement from the Constitution and just enacting it in state law, which is where it arguably probably should have been the whole time.
So is that one of the examples of the only time that a minimum or rate is suggested in the article?
It does appear so. My caveat for all of this is I am still going through the bill and still writing the amendment guide. So I'm sure there are things that I haven't seen or that I'm missing, but it does appear that these are the only areas where there are, actual requirements that a certain tax be charged. Most of the Article 7 just authorizes and allows a certain type of tax to be charged, but doesn't necessarily require it. These seem to be the areas where they're moving that out, and the only ones that I can find that have some minimum requirement.
And just to be so, yeah, because when I first saw this, I was like, well, that's odd. But now that you're saying it, it makes more sense on the cigarette tax. And I think I remember that actually. The second part of it, though, are they taking out a requirement to tax motor vehicle license, or are they requiring? Okay, got it.
Yes, they're removing both of those items. Okay. Like I said, they're both still going to be in state law. They're just removing the requirements for those in the Constitution. So bottom line is it doesn't actually really change anything in terms of what you're getting charged. It just gives the legislature more flexibility in the future if they want to revisit these things. Then the next item is it repeals the caps on the dedication of severance tax revenue to local governments. So local governments that have oil and gas on their lands, they get a cut of any sort of severance taxes that are collected from that oil and gas production. But Louisiana has historically capped the amount that goes to local governments, and this is particularly aggrieved North Louisiana legislators who feel like their local government agencies aren't getting enough of a share of the severance tax revenue that is collected off their land. So this just removes the cap, and it gives the legislature the ability to increase or decrease the proportion of severance taxes that they pay to local government, and to establish a maximum amount if they want to, but not to lessen anything from where they have been currently. So it just gives them more flexibility. And what is expected is that local government agencies are going to get more revenue from severance taxes from the state, and the state will lose a little bit of the severance tax that it collects currently. Okay. One of my favorite areas, the government growth limit. This was something that was not necessarily an administration request. This was something that some more conservative legislators have advocated for. Over the years, you might be familiar that we have an expenditure limit in the Constitution that limits how much growth in government spending can be annually. There have been fights in the last term, in particular, over whether or not to exceed that cap with a 2/3 vote and spend above that limit. Those were pretty big fights at one point. This would enact a different sort of limit. It would keep the expenditure limit that exists, but largely my reading is that that expenditure limit would largely be irrelevant because this one is a much tougher limit. So this is a new limit that would be enacted on that deals with the annual growth in state general fund spending on a specific set of programs that are ongoing programs and services. They give themselves a year to enact it, so it wouldn't start with the budget that they are crafting in the upcoming regular session. It would start a year later. And the limit is tied to population changes in the state and other inflationary factors. It's a fairly complex formula. I will not get into all the weeds of it. The formula will actually be in law, so it can be tweaked over time. I think the House wanted it in the Constitution, but the Senate did not agree to that. So there is some flexibility to changing how this limit works, but it is essentially looking at, is our population growing, or are we just growing government without a corresponding showing that it is somehow retaining and keeping people here in greater numbers. Now, that's not to say that they can't spend above that limit, but anything above this government growth limit, they can only spend it on one-time items. So essentially road and bridge work, coastal projects, capital outlay projects, things that aren't like the Medicaid program or social services or ongoing corrections expenses. So the idea is that you don't grow the state operating budget in a way that is unsustainable over time. That's sort of the philosophy behind it. You can change a lot of these things with a 2/3 vote, but there are some limits on how much they can tweak in the law, separate and apart from the Constitution. And I'm looking at Julie. I think she's got a question.
Well, yeah, I mean, it sounds like you already pretty much answered it, because my concern is that new things happen that are unforeseen that cause maybe a greater projected, need to grow. Like you could have some really bad years in the market and need to increase what you're putting in for, employee pensions. And would this still allows for them to be able to still be nimble enough to meet the needs of the government?
I think a couple things. One, I think the reason the Senate left the population changes and inflationary factors that they're using in law instead of in the Constitution is to try and give themselves some flexibility. But I do think people who have concerns about this would say, what happens when you have a disaster like Hurricane Katrina? A lot of people temporarily moved out of the state, but that is a state population change that will be recorded. So there are questions, I think, that a lot of people will continue to ask about, is there enough flexibility? But I will say that people the legislators who really wanted this in the law and in the Constitution really want to control the size and scope of government, and they see this as a method for doing that. But it will greatly limit how much flexibility they have in the legislature as they craft a budget each year, and they will have to work through that. And I suspect that this will be an ongoing debate over time about whether people are happy about how this really plays out. I will say that the language that the Senate agreed to and that ended up in this final version is dramatically different than where it started. It gives them more flexibility than the original proposal, but all of this gives the legislature less flexibility in appropriating money and deciding priorities. Um, it adds new confines that they have to comply with. And I think they tried to game through as much as possible scenarios where population and inflation can be affected by things beyond the state's control. But it will take time to really determine if they gave themselves enough caveats on this one.
Yeah, because then I also think about so many programs that we would like to see us be able to take on to help people. And you won't be able to just add a program, even if there is revenue coming in to be able to satisfy to add a program or something.
Right.
Right?
I think of one of these. I mean, well, you will get some ability to grow in terms of ongoing expenses, like based on this limit, but it will have a cap on how much you can grow each year.
Right.
And I think about programs. I know for Ellevate in particular, there is an interest in expanding spending on early childhood education, for example.
Exactly.
That, those kind of areas will have to work within this government growth limit. Now, you can make the argument, well, you can cut spending someplace else to fund something new. But this will definitely curb how much new spending they can have annually as they develop the budget. And I really, I haven't seen any publicly released scenarios. On my list of things to do as I'm working on the guide is to ask the legislative fiscal staffs if anybody has any sort of data to show sample scenarios of what the limit would have been in perhaps past years using these calculations. I suspect they might have had those developed privately for discussion, but I haven't seen anything like that released publicly to sort of game out what would it have looked like if we had had this government growth limit, when they were developing the budget 2 years ago, for example.
Yeah, for sure.
So I think this is one that is definitely more to come, and I'm not sure we entirely understand the real ramifications.
Yeah.
Okay, here's another fun one that is very complicated. So this, and I realize I misspelled a word. Apologies. Budget Stabilization Fund, not found. This section of the article would merge two big state savings accounts that we have. The Budget Stabilization Fund, which is normally just referred to as the rainy day fund for the state, and the Revenue Stabilization Trust Fund. I'll say currently those two accounts contain about $3.8 billion. The rainy day fund has about $1 billion in it, give or take. I mean, investment earnings and such over time. And the Revenue Stabilization Trust Fund has about 2.8 billion in it currently. When the merger happened, the Budget Stabilization Fund would grow to about 2.8 billion and reach a new cap. It would set a new cap. So currently, we've never actually reached the cap for the Budget Stabilization Fund, but there is one in the Constitution that says it can't be larger than 4% of total state revenue receipts. That's not state general fund money. That's a different calculation of all kinds of different state revenue sources. But we've never reached that cap. So I've heard varying numbers about what it really means. But in terms of what this would do, it would raise that cap from 4% to 7.5%. But then by merging the two accounts and moving some of the money from revenue stabilization into the rainy day fund, that fund would automatically grow to 2.8 billion and then hit its cap immediately. So that means no new deposits get made for at least several years. So currently, and I'm so sorry this is so complicated to those of y'all who are watching this, the way we deposit money into the budget stabilization / rainy day fund is 25% of any state surplus has to go in there. And then the legislature over time can make other deposits. But generally speaking, what has been filling up the budget stabilization fund are all these surpluses that we have seen in recent years. Revenue stabilization is different. When it got passed in 2016, I don't think anybody envisioned it to grow as fast as it did to currently have $2.8 billion. It gets any corporate tax collections above $600 million a year. And in the post-pandemic economy, when recovery happened and the economy has been booming and corporate profits have been booming, we have been regularly collecting over $1 billion in corporate tax collections each year. So anything above $600 million has been going into revenue stabilization. There is another provision that part of oil and gas revenue above 660 million also goes into revenue stabilization. So it has been collecting some oil and gas money, but the lion's share of that 2.8 that billion that's in it currently generally comes from corporate tax collections. Now, the way budget stabilization is set up, it's very difficult to access. You can only access it for times of disaster and deficits. And then there are very strict limits on how you can use the money. No more than a third at a time. You need 2/3 votes to tap into it. And there are all these restrictions. Revenue stabilization, even though it's in the Constitution, essentially the legislature can declare a quote unquote emergency for almost anything. And then with a 2/3 vote, they can raid the fund. So the rules are very different governing these funds. But when the two would get merged, the Revenue Stabilization Trust Fund would eventually disappear. We'll talk about what happens with some of the money in it later when we talk about inventory tax. But new dollars, so we'd move a bunch of the money in revenue stabilization into budget stabilization. It would cap out. And that means any other new dollars that otherwise would have flowed into the Revenue Stabilization Trust Fund just goes back into the general fund. And it's available for spending with very few restrictions, except, as it relates to the government growth limit. So it's sort of a weird dichotomy. You'll have stronger protections for the money in the budget stabilization fund, and it will be a much larger savings account for the state to access in times of real need. But they will have capped it out, so there's no real way to add deposits for years because state revenue receipts have to grow in order for the cap to grow. So, in other words, even 25% of a state surplus won't have to go to budget stabilization as long as that account is in its cap. And the provisions that we currently have for revenue stabilization that are essentially designed to hedge against plowing a bunch of uncertain, very volatile revenue sources, i.e. corporate tax collections and severance tax collections, into a savings account so you don't just blow up your budget with it, those provisions will be gone. And that money will flow freely into the state general fund. The caveat here is they've lowered corporate tax rates and they're eliminating the corporate franchise tax. So the levels of corporate tax collections that we get will probably be significantly lower than what we've seen. So it's uncertain how much money would flow into the general fund that otherwise would have been allocated to a trust fund. But the bottom line is it likely will give legislators hundreds of millions of additional dollars to spend over the course of working through this. And I'm sorry that's clear as mud, but that's the best I can do to explain that. Yeah. This is one of those provisions that I think, at least privately, legislators are really watching. If this constitutional amendment passes, it likely will give them access to a lot more money to address some budget gaps that may come up, and also to just use for capital outlay projects, road and bridge work, all those kind of things that they're always looking for money for. So I think a lot of legislators are very aware this could help them financially with budget issues, but it wasn't greatly talked about or debated when they were doing this Article 7 rewrite.
Yeah. I mean, I always kind of like the idea of the Revenue Stabilization Fund because those revenues, the corporate and severance, were very variable in nature, and it forced us to hold on to excess funds when times were good and then to release those funds for use in the government when times were bad. And I mean, there were times when our corporate collections were extremely low. And now with, just it's a little unclear how it's all going to shake out. But
Uh, at some point, I did a chart just for my own edification to see what corporate tax collections look like over the last 20 years. And I'll say pre-pandemic, there were time periods where we had corporate tax collections as low as under $200 million a year, and that's combined income and franchise tax. So
exactly.
this really was at the time designed to hedge against blowing up your budget with like money that may not appear year after year. But I will say, since COVID, we have always exceeded the figure. So it is a real question mark about what the true implications of the merger of these funds will mean in terms of the amount of money going to the general fund. We just don't really have a good sense of it, or at least I haven't seen anybody explain a good sense of it yet.
Yeah,
But I
agreed.
do think, based on my conversations with revenue, there is an expectation that legislators will get more money if this merger happens, that they will just have more money to spend, and less money going into a savings account. I think everybody would broadly agree on that statement, even though they wouldn't necessarily know the amount.
Yeah.
Okay. So, teacher pay raises. This is the one that's probably got the most attention and most discussion during the legislative session. So the way this works is sort of complicated, but the amendment would dissolve three education trust funds that we have: the Louisiana Education Quality Trust Fund, the Louisiana Quality Education Support Fund, and the Education Excellence Fund. Currently, the principal of those funds is not touched, but investment earnings, which generate about $68 million a year, are used for education programs. They're split between K through 12 public schools and higher education. So the Board of Elementary and Secondary Education has oversight over spending the money that goes to K through 12, and the Board of Regents has oversight over how it spends its money that it receives from those investment earnings. Currently, about $2 billion is stored in all of those funds. What this would do is get rid of those funds and use that money to instead pay down retirement debt. By doing that, you lessen the cost that of retirement payments that the K through 12 public school systems and colleges have to pay each year. So I'm sure everybody understands, when you're in a retirement system, your employer pays part of the retirement and the employee pays part of the retirement. So these public school systems and public colleges pay their share. If you lower the and a part of what they pay is an amount towards the debt that is owed on the system. So if you get rid of a lot of that debt, you lessen the cost that these schools have to pay for retirement. And that's an estimated $283 million in savings. And on the slide, I'll show you the breakdown depending on the system. Meanwhile, it also saves more than $1 billion in interest payments on this debt. What the legislature would require the K through 12 school systems to do with their savings is to use that savings to provide a $2,000 permanent pay raise for teachers and a $1,000 permanent pay raise for support workers. This is not new money. These support workers and teachers for 2 years have been getting these amounts as stipends, but it has not been guaranteed from year to year. This would require it to be permanent and based in their base salary. So eliminate the trust funds, use the money to pay retirement debt, require the K through 12 school systems to use their savings on retirement to make these pay raises. Now, higher education will get savings as well, estimated about $75 million, and they don't have requirements on how they would spend it, but they have been using their share of the investment earnings on various programs, including like endowed professorships and those kind of things. So ostensibly, they will probably use at least a portion of their savings to continue those programs they had already been paying for. Does that make sense?
Yeah. So, I think that I know, and I don't know if your next slide gets to this, but there was some concern from early childhood advocates that some of this money that was in the K through 12 mix was being used in a early childhood, and I don't know all the details of it, but being used in early childhood. Um, has
Yes.
anybody addressed how we're going to make up that gap?
So yes, I've heard some differing figures on how much of that money went to early childhood education, but it was several $1,000,000. The public school systems would not be allowed to use their money for that until they also cover these pay raises that they would be required to pay for. But both the administration and the legislature repeatedly said on the record, when pressed by early childhood advocates, that they intend to backfill any gaps that would arise because of this, that they don't intend for this to mean that early childhood education takes a cut in any way. That is something that advocates for early childhood education will clearly be monitoring. I know y'all will be monitoring it in the regular session if this passes, but they were repeatedly asked to say publicly on the record that they would backfill that money, and they've pledged to do so. So, okay. So then we move into there are all these other funds that currently exist in Article 7 of the Constitution. I just took a section of the ones, these are the ones that will all be maintained. So we talked about the Budget Stabilization Fund, the Rainy Day Fund. The Transportation Trust Fund will stay constitutionally protected, including with its various sub-funds. All the language that currently exists remain. The Coastal Protection and Restoration Fund will stay constitutionally protected with all of its existing provisions. The Hospital Stabilization Fund and the Louisiana Medical Assistance Trust Fund. These are funds that basically involve provider fees that get used to pay for Medicaid programs. I am completely oversimplifying this. Kathy Kleber could probably give you a PhD level course on how these funds operate, but the bottom line is they pay for services and programs through Medicaid and are used sort of as state match to draw down federal funds. And then the Wildlife and Fisheries Conservation Fund also is constitutionally protected and remains. That's the one that collects like licenses and fees that hunters and fishers pay. And that goes to, wildlife management, enforcement, all of those kind of things in the Department of Wildlife and Fisheries. So all those stay in the Constitution and keep the same protections they have. But there are other trust funds that are currently constitutionally protected that will move out of the Constitution and move into statute. They will have enhanced protections in statute. In other words, it will take a 2/3 vote to change any of these kinds of designations. They can expand the list in law if they want to, but it will require higher hurdles to remove any of these. There are two categories. The permanent trust funds are the ones that are still going to work as like real trust funds where the principal can't be spent and they can just spend interest earnings on various programs. Those are the Millennium Trust and the Unclaimed Property Trust Fund. The Millennium Trust has all these pieces and parts that involve payments that go to TOPS, to some smoking cessation programs, healthcare, education. There are a whole slew of subparts. I'm still digging into those. So stay tuned for the Constitutional Amendment Guide for more on that. But the bottom line is they will, the principal still won't be able to be touched. It's just the investment earnings. Now, the second category is program funds, and it's the Artificial Reef Development Fund, these various oil spill and oil field site funds, the Louisiana Fund and local revenue funds. They all just pay for programs and services that currently exist. Money flows in, money flows out. They don't necessarily maintain large balances from year to year. They can spend down. There are no restrictions in terms of spending the principal. Again, they can change some of this with a 2/3 vote, but it is a higher hurdle than it would otherwise have, but they will lose their constitutional protection. So if the legislature wants to tweak any of these over time, they will be able to do that with a 2/3 vote. Anything on that before I move on?
Well, I only had one question. Those two educational funds, they were not part of the Millennium Trust Fund. They were completely separate.
Yes, the Millennium Trust has these sub funds that include some educational funds, but those are different funds than the other ones. So Like I said,
Okay.
Millennium has like a TOPS fund underneath it. It has some healthcare funding that's underneath it, and another education fund. I don't remember all the sub fund names,
Yeah.
but all of those are maintained. Those are different than the education funds that will be liquidated that are commonly referred to as the 8G funds.
Good.
And this local revenue fund, that's a program fund, that one is actually a new creation, and it is tied to it's a sort of a mechanism that they're going to use to deposit money to pay local governments that want to get out of charging an inventory tax, which we'll get
Yeah.
to later. But that's a newly created fund that is specially protected but designed to deal with the inventory tax situation that they're trying to discourage locals from charging. Which brings us to property taxes. So your current homestead exemption will stay exactly the same. They're not changing it. They're not removing it from the Constitution. They're not trying to do anything with it. And they highlight this point in the ballot language. So everybody can stop worrying about the homestead exemption. The other piece of it that was heavily talked about was it will offer a one-time payment to local governments that decide to stop charging property taxes on business inventory. And the payments have to do with an average of how much the local government currently makes from charging those taxes. If they decide to turn off the charging of the taxes very quickly, they can get up to $15 million. If they sort of phase it out over time, then they max out at getting a $10 million payment from the state, but it will vary from parish to parish depending on how much they collect from this tax source already. They will use that $1 billion or so that's going to remain in the Revenue Stabilization Trust Fund. That's the balance. They're going to use that money, or at least a chunk of that money, to make these payments. So they have identified a revenue source for how they would make these payments. Now, there are going to be a few parishes in the river parishes that get like, I think St. Charles gets somewhere in the vicinity of 60 or $70 million a year in inventory tax collections. They're probably not going to follow through on getting rid of that tax because it's not going to be cost beneficial to them to do so. But a lot of parishes that get smaller amount of money from this tax and will be able to work their way through other ways to pick up that revenue will probably take the state up on this. The thing that it does for parishes that don't necessarily want to get rid of inventory taxes is they are allowed to adjust the fair market value of property that is considered business inventory for the purposes of calculating the tax. So essentially, the parish could sort of backdoor grant a partial exemption of the inventory tax to a business by cutting the assessed value of their property. That's me sort of simplifying it in the best way I can. So that's inventory tax. Like I said, they've identified a source of money to pay for this, so it would not cause problems for the state fisc by doing these payments. The other thing this section will do is they are trying to make it much harder to create new property tax exemptions. So they would require a 3/4 vote, which I don't think I've ever seen a 3/4 vote required for anything, quite honestly. But this would require a 3/4 vote for any new property tax exemptions to be enacted and a 2/3 vote to change any existing property tax exemption. And as y'all know, if you watch the legislature, a lot of time these property tax exemptions sail through because it affects local government revenues and not state government revenues. And local governments often complain about that because it hits the revenue they have to, pay for their police departments and to pay for all of the local services that local governments provide. So this is designed to make it harder for the legislature to just enact those, although I will also note that often these things pass with like almost unanimous consent. So we'll see what the practical implications will be of this if it passes.
Yeah, for sure. Melinda, I always thought it was just so crazy when we would vote for a new property tax exemption. We didn't collect any property tax as a state. We were just like voting to give away the locals money, and it happened all the time. But
Right.
I think this is a good move in general.
And, as you know, the Constitution in this article limits what kinds of taxes local governments can charge already. So property taxes and sales taxes are the lion's share of the revenue sources that local governments have to operate. So that's why property taxes are so important, and the exemptions can really impact the bottom line of local governments. The other thing is any new property tax breaks, exemptions, exclusions, all of those things will be limited to only being considered in fiscal sessions instead of any year that they would like to. And then if any of you voted in the fall election and remember that very complicated tax sale administration amendment that I've already tried to block out of my mind, even though I wrote about it. All of those changes that passed get retained in this new version of Article 7. So it just duplicates the language that voters already passed. So we don't revert back to the old system that we just tried to get rid of. And then it moves some of our existing property tax exemptions to statute. It doesn't change any of the special assessment levels or things that various entities get, but some of them will be moved to statute. So if the legislature wanted to change them in the future, it would be easier for them to do so. I will say that the property tax exemption for for churches and religious organizations is maintained in the Constitution. So that's not one that's going to be moved to statute and could be changed later. The full list of what those are that are being moved to statute, I'm still working on. So I can only give you a high level overview on that, but our guide will eventually have more information on which ones are getting moved. And then we are done. You've all made it through. This is what the actual ballot language is going to look like. And I'm highlighting it just because they did sort of seem to cherry pick some of the things that might be more popular, which is, increasing income tax deductions for people over the age of 65, lowering the maximum rate of personal income tax. They talk about the government growth limit. They talk about retaining the homestead exemption, which is interesting to keep in ballot language because it's not even being changed, but they highlight they're keeping it. They talk about the teacher pay raise. So they did, look, it's very difficult to explain 115 pages of changes in ballot language and fit it on a ballot on a computer screen, but they did clearly highlight the things they thought would be of interest to voters and perhaps more popular with voters than some of the other changes. So I hope that voters actually read a little more than just the ballot language for this one.
Well, and go back to that because it's just, I mean, when you read it, it's like, do you support lowering the maximum rate of income tax? Happy. Increasing the income tax deductions for citizens over 65? Yes. Provide for a government growth limit? That probably sounds like a good idea, right?
Right.
Modify operation of certain constitutional funds? Okay.
That seems harmless.
Provide for property tax exemptions to retain the homestead exemption. Absolutely. We like religious organizations. That's next. A permanent teacher salary increase sounds good, and other modifications. Now,
right.
All of that being said, I don't have any problem with it. I just thought, I know that the day before, I think it took up an entire legal page to get all the words on it. So they did good
well,
work.
the original version that was proposed, I will say, was basically like, do you support apple pie and puppies? So this is better than where we started. Somewhere in the middle, it was that very long version that you're talking about that probably would take up a full voting machine screen, which would just be overwhelming probably to a voter. So I know they did struggle with trying to, meet the requirements of the Constitution for explaining what's in an amendment, but they clearly had a viewpoint of how they wanted this one to look.
Yeah.
I'll tell everybody that our constitutional amendment guide will be available in February, and we'll post it on our website.
Thank you so much for sharing this information with us today. And for all of you listening, thank you so much for sharing your time with us today. And if you're interested in these types of policy talks, check us out on Ellevate Louisiana's website, where you can learn about our events, our policy committees, and our advocacy efforts. And you can also join Ellevate Louisiana there. That website is ELLEVATELA.org. So ellevatela.org with 2 L's. We hope to see you again on this video podcast as we're excited about kicking it off again this year. And we'll see you soon.